please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, we have Rajat Bose joining in to discuss the market technicals at 11:30 today. Rajat, hi. Thanks very much for joining in. So for the Nifty, what is your call at this point?
You see, Nifty is close to its support zone between 10,635 and 10,605. There is considerable support for the Nifty. What I would say is that here, if you have short positions, partly you should cover. And if there is a bounce back, or at least a little earlier, there was some signs. There had been some signs that it is actually headed up. If it were to head up, then when it reaches 10,680 to about 10,710, around that level, you short again with the stop above 10,738. Nifty, maybe at higher levels you should sell. But regarding the bank Nifty, you can play buy weakness, sell strength. The range is between 25,425 and 25,725. Unless this 300-point range is taken out on either side in the bank Nifty.
Okay.
So, I mean, okay. So, Nifty you short, bank Nifty at low levels you go long, right? That's basically the call.
Yeah.
What would you trade in terms of stocks, Rajat?
Yeah, I would first choose Tech Mahindra May futures. I would put a stop loss below 657 and I would keep a target of 675. Tech Mahindra is actually showing a good recovery both in the spot and the futures chart. So that is one. And the other one is ONGC. You put a stop loss below 181 and target would be 188. It's an intraday call. Probably towards the later half, you will see ONGC coming back into action once again. Two names from yesterday, one is Interglobe and the other is PC Jewelers, Rajat. Do you have trades, existing trades or any view there on both those names? I personally do not have any trade, but one thing I can tell you, Prashant, that is both Interglobe and PC Jewelers, if you look at the chart pattern, PC Jewelers earlier had a similar waterfall kind of a pattern and then it recovered, then it is falling again. The problem here is that even for Indigo, even if it were to move up, you should actually seek an exit or go short because this kind of pattern suggests that it is the downtrend is here for the long haul. Even though initial huge volatility could be there, but thereafter you will see exiting.
Okay, fair enough. I mean, I think we've got PC Jewelers Ekta now, which is up, I thought 22%.
20%. It was up 20%. Maybe we can pull up the stock to just check how it's doing currently. But in the meantime, Rajat, just wanted a chart check in terms of what you're tracking on NIIT Tech. That stock is weak ahead of numbers. And Sun Pharma, which was strong yesterday, come off today.
Well, regarding NIIT Tech, what I would say is that it is currently at a support level. This 998,000 to about 990 is a support area. Once that is taken out, it can actually head down and seek levels between 950 and 900. Around those levels, you will see support coming back again. And on the upside, unless it takes out 1,050, you won't see much of an upside movement. In fact, I'm actually pretty much negative about mid-caps and pharma for the precise reason that both the indices are suggesting that even though there could be a sporadic rallies like what is happening now in the IT stocks, but at higher levels you would see selling again. Regarding Sun Pharma, I would say that yesterday's was a one-off kind of rally, but unless yesterday's top is taken out, for no further higher levels are likely immediately. On the downside, if it were to fall below 522, then you expect all the way down to about 506 to about 510. Disclosure has it that I hold Sun Pharma in my investment portfolio.
Well, the GST Council is likely to consider levying a sugar cess of up to 5% when it meets today. And ahead of that meet, CNBC TV18 learns that some states are not on board with the idea. Timsi Jaipuria joins in with all of the details and a heads up to this GST meet. Timsi.
Well, it's a packed agenda for the GST Council this time, starting from sugar cess. What we understand from sources that the council is going to deliberate upon whether to levy a sugar cess or not. The officers meeting states are divided and the council does not seem to have any unanimity on application of this sugar cess. Now the proposal is, the idea behind levying a sugar cess is that to compensate the farmers and the sugar manufacturers, but the states which are non-sugarcane growing states, they have opposed this. For example, Assam, Tripura, etc. They're saying that this would mean cross-subsidization, and they are not in favor of levying any other cess. Not just this, the council is also going to deliberate upon the idea to incentivize digital transactions. Up to 2% of instant cashback is what government is mulling, capping at 100 rupees. That is, a consumer can avail only a maximum of 100 rupees of cashback per transaction. Not just this, the council is also going to talk about GST and conversion from a private entity to a public entity. Under this proposal, government is going to take a decision on converting 100% stake into a public entity, where 50% will be held by the government, central government, and 50% by the states. Not just this, the council is also going to deliberate upon and give an in-principle nod to the broad principles and agenda points of forming a new simplified return form. GOM headed by Sushil Modi is going to submit its report, which is a fusion model of what Nandan Nilekani suggested and what tax administrators were suggesting. So let's see what actually comes ahead of the GST Council. But yes, it's a packed agenda.
Okay, Timsy, thanks very much, and we will have Timsy back when the meeting is over. We have the outcome. Appreciate you joining in, Timsy, with those quick details about what could be discussed. Well, let's shift focus to Karnataka, and I mean the battle for Karnataka is heating up. Prime Minister Narendra Modi started his campaign in Karnataka earlier this week. And we also have the BJP Chief Ministerial candidate B.S. Yedurappa releasing the BJP manifesto. Rukmani is now joining in from the ground with the details of the manifesto and what the mood there is like. Rukmani, morning. Go on.
Well, with just about a week left for the elections here in Karnataka, the BJP today released its manifesto, where Prakash Javadekar, Muralidhar Rao and also B.S. Yedurappa, of course, was present. Special thrust being given to the farming community, especially in the BJP agenda. Yedurappa went on to say that the day he takes oath in the first cabinet meeting, there'll be a farm loan waiver of up to 1 lakh from both PSU banks and also cooperative banks. Also, financial support of up to 10,000 rupees will be provided to small and marginal farmers. And also BJP, of course, going on to say that they will be reviving the cow protection bill once they're back to power. Also taking Congress, interestingly, on many turfs. One, of course, that being, the Congress also announced giving away smartphones to students. BJP will be giving away smartphones to women in the BPL families, and also provide sanitary pads at 1 rupee. And also, in fact, has gone on to say that all students who are joining colleges will be given free laptop, especially focusing on the law and order situation. BJP has gone on to say that they will revive the Lokayukta institution to its fullest with all the powers back, and also, in fact, fulfill all the vacancy pending in the police department. And really a comprehensive manifesto that BJP has brought about with all the points that they have been talking about, where the Siddaramaiah government has failed in the last 5 years. Back to you.
Okay. All right, Rukmani, thanks very much for that. But let's get back to talking about numbers then. We have PNB Housing, which actually reported what was a steady set of numbers. We had the NII, which was up 36% on a year-on-year basis, and the profit was up 44% this time round as well. Asset quality was largely maintained, so 0.3% is where the gross NPA came. Versus 0.25 and net NPA at 0.25%. So the loan growth also remained robust for PNB Housing Finance, but it has come at the cost of declining yields. To talk more about this, we have the management of the company, Mr. Gupta, the MD, joining in to discuss this. Mr. Gupta, thanks very much for joining in. Well, the loan growth has remained robust, but what is the kind of growth rate that is expected to continue for the company?
As we keep saying that our trajectory for growth rate is linked to the macroeconomic indicators in the industry, and we have built capacities to at least do about 1.7 to 1.75 times of the industry averages. So it is linked to how the industry or the macro market indicators span out in the new year. And the demand is strong. It's a pent-up demand, and I think it's a time when new launches are coming. We are seeing them in parts of the country, and I think a healthy demand will be maintained over the next 12 months.
Okay. Mr. Gupta, you know, your net interest margin, in fact, however, was the lowest ever owing to a decline that we've seen in yields this quarter. How do you see this panning out?
I would not say that NIMs are the lowest. The thing is the combination of products and the segments. We heavily, I mean, our portfolio is 80% retail and only 20% is wholesale. And that is why we are conservative players, and it does get reflected in our portfolio quality, where the gross NPAs are only 0.33%. And if you take it at an AUM level, they come down to 0.31%. And we are very confident that we can pass the, I would say, the rising interest rate to our customers. We have already done a reference rate change of 25 basis points across all segments and all products, and our customers have responded well. So I think we can maintain a spread between anywhere between 200 bips to 210 basis points. Our NIMs will be in the vicinity of about 305 to about 310. And our gross margins should be in the vicinity of about 340 bips. And that should be safe for us to give a decent profitability on the portfolio that we are building.
You know, 30% of your books is essentially non-home loans. Almost 60% caters to the non-salaried segment. And despite this, yields have been under pressure. Can you explain that?
The yields are also linked to the cost of funds. And if you see, the cost of funds in the last full year have come down dramatically, much faster, I would say, than the yields. And I can give you those figures for the entire year. They are with me. So if you were to say, you know, how did the yields and the spreads work out, then if you were to say the yields came down from 1076 basis points of 17 to 1007 in 18, but the cost of borrowings came down from 855 to 771, and hence our spread for the year went up from 221 basis points to 236 basis points. And the yields moved up from the NIM moved up from 2.97% to 307%. So there has been an improvement in the spreads and in the NIMs over the last year.
But your yields have fallen from Q4 of 17 to Q4 of 18, which has compressed NIMs in the same period.
It's an annuity product, and the best way to see it is on an annual basis and not on a quarterly basis. There would be quarterly aberrations, but annually speaking, we will be very constant. Our strategies are not changing, and we are very sustainable in what we have designed to continue to do in the market.
Okay. What is your view, Mr. Gupta, when it comes to geographic expansion as well as on operating efficiency?
We have in the last year, the year gone by 17-18, added 21 branches in 7 new locations. This year in 18-19, we are going to add 24 new branches in 9 locations and also add 4 more underwriting hubs. So I think we are going to reach out to a far larger customer segment and the customer base across tier 2, tier 3 cities. We are already there in metropolitan cities. The first 10, we are very much there. And our growths should be healthier than the industry averages.
Okay, well, that's on growth. You've increased securitization to aid your net interest margins. How far would you be comfortable to securitize your book?
So what we plan to do, strategically speaking, is to have a securitized pool of about 8 to 10% of the AUM, asset under management. And that is exactly what we have done in the last quarter also. And that is why, you know, I'm very confident that our cost to income ratios and our OPEX will improve, because we will be having a lot more of fee income through the servicing arrangements on the portfolio that we will be securitizing.
Could you talk about the sharp fall in the gross NPA? Did you sell down non-performing loans in the quarter?
We have not sold down a single loan which is an NPA loan. We have not visited the ARCs in our history ever. And yes, what happens is that the SARFAESI Act is so designed that if you follow the process in true earnest, it takes about 6 months wing to wing to cure an account. And that is why always, the NPAs, so that, we start off our actions in April itself, and the first decline comes in September and the second decline comes in March. So there is no, I would say, unusual resolution. It's a business as usual, and recoveries is as much a part of lending as it is, it's one of the functions of a lending institution. It is nothing unusual.
Okay, thanks very much. Appreciate you joining in. Good luck with the business, sir. And thanks for being on CNBC TV18. Well, the market is selling off, and it's come off sharply now. We're down 60 points. When we started, we were down 45 odd at 11. There was recovery which set in. We were down 25 at one point, and now we're down 60. So this is basically the day's low, which is coming through. And look at the reversal on the Nifty Bank, which has also been extremely sharp. So from being up almost 30-35 points, we are down 41 now. So not quite at the day's low, but it's not very far. I think about 30-35 points away from the low point of the day on the Nifty Bank. 25,563 is where we stand on the Nifty Bank. Sun Pharma, Infosys, Bajaj Auto, Yes Bank, ITC, Axis Bank, Eicher Motors, all down over 1.5%. So those are 7 stocks, Nifty stocks, with losses in excess of 1.5%. The market is down. We were pointing out how things are starting to look slippery. We're down 61 points now on the Nifty. 10,618 is where things stand. We've got time for, I'm told, one more earnings preview. So let's use that. Godrej Properties will release its numbers later today. Interesting company. Real estate as a sector has been doing well. Sonal is joining in, previewing the numbers. Sonal, morning. Over to you.
Good morning, Prashant. Thanks a lot for that. Well, Godrej Properties is one of the best companies in the real estate sector, and a lot has happened with the company in Q4. For example, the company has sold 50% stake in one of its major projects, Godrej Trees, to Godrej Fund Management, and that is what is expected to drive higher income for the company. Also, they have undertaken a lot of launches, but the analysts are expecting that the sales will be driven by the present launches. Also, we are expecting that the gearing is expected to be driven by the cash flows from the commercial projects. So, commercial projects is one more thing that we have to keenly look out for, because they've been doing very well in that pocket. Company has been able to clock very strong pre-sales in last 3 quarters, and that is what is expected from them this time around as well. And major focus will be on the Godrej BKC project, where only 51,000 square feet of inventory is left, and if they're able to complete it, that will be very good for the company. In terms of revenue, we're expecting an increase of 14%. EBITDA is expected to go up by around 25%, but some compression in margins because they've undertaken a lot of joint ventures. So how do they really account for that is something that we have to look out for. Profits are expected to go down by 16%, but on the whole, we're expecting a mixed quarter. The numbers will be coming out during lunchtime. Let's see how the stock performs till then.
Okay, all right, Sonal. Thanks very much for that. Well, on that note, we're going to wrap up trading hours. Stay tuned. Halftime report up next.